We saw a spectacular rebound in the price of gold and silver this morning. What caused this to happen? We're going to dive into that big news in this video. Also, I want to share with you some very interesting information I've been receiving regarding retail silver demand. It's fascinating to look at. Plus, I want to review what two gurus are predicting for the price of precious metals as we move into the end of the year. But before we do that, I want to get your opinion on something, if you don't mind. You're smart and you're a nice, loyal person who joins me here in the basement. One of my viewers really liked something that I said in a previous video. What I said was that silver is the original cryptocurrency. And I mentioned to this person that I thought I actually made that up myself. And I'm curious, could that become a battle cry for the silver stackers of the world? Probably wishful thinking, but is silver the original cryptocurrency? We can talk about that later. Let's dive into this big news we got that moved the precious metals markets. Let's do that right now. Gold is currently trading right around $1,700 per ounce, got as high as $1,710 this morning, but that was after, folks, early this morning, getting as low as $1,680 per ounce. I can tell you there's an inverse relationship between the price of gold and my blood pressure. But it was good to see the price stage a spectacular rebound earlier this morning. We'll see if that holds. Silver, $18.80 per ounce, same situation. Staged a rather spectacular rebound this morning. The mining stocks have yet to open, but we know the mining stocks are in the crapper right now. Most trading at or near 52-week lows. It'll be interesting to see if the price of gold holds the gains and the price of silver holds the gains, what the mining stocks do today. It could be an interesting day. Now, I want to talk about this major news that moved the market, that moved the precious metals market. But first, I'm going to sell you. I enjoy having you here in Ron's Basement. You are important, and you're important to me. There's no Ron's Basement without you. You can subscribe, give the video a thumbs up, hit the bell notification, and you have my full permission. You can share my video anywhere with anyone, including your grandma. Now, let's get to this major news of the day. It was the ECB shocking the markets with a 0.5 percentage point interest rate rise. Yes, it seems those fiscally and monetarily responsible Europeans have suddenly become hawkish. Hey, you think we have bad inflation? You should see what's going on in Europe. It is a total nightmare. You think our finances are in bad shape? Just take a look at any of the European countries. Their financial condition generally is much worse than ours, and in aggregate, the European community is in much worse shape than us. Their banks are a total, utter joke, especially when you look at leverage ratios, but we won't dive into those complicated subjects right now. My point is that the ECB raising rates by 0.5%, perceived as being hawkish, right? Well, that makes the dollar go down in value because the dollar was at historic highs, okay? Because the Federal Reserve, our central bank, had been hawkish in their supposed fight on inflation. Now that the Europeans are supposedly fighting inflation as well, on a relative basis, that makes the dollar go down in value, which makes the euro go up in value. When the dollar goes down in value, the price of gold goes up. It's all a little confusing and a little backward because, right, in what we've always been taught and what really makes sense in the long run is that high inflation is good for the price of precious metals. But nonetheless, in the interim, we have to deal with all this minutia. Now, I want to give you a quick analogy. People say about the dollar and the euro and the yen and the DXY and all this. Here's the best analogy I've heard. And I didn't make this one up like we did silver, the original cryptocurrency. But this analogy for these currencies, comparing them to one another, It's like three guys jumping out of a 2008 story building, a really tall building. There's the dollar jumps out, the euro jumps out, and the yen jumps out. They're all falling to earth, but they're all falling at different speeds, right? They're all doomed and falling. Lately, because of the Federal Reserve of the United States hawkish stance, the dollar guy realized that, oh, I can put my arms out, and that slows me down. Well, essentially what just happened was the euro guy woke up and said, oh, I can put my arms out, and that slows me down. Now, the Japanese guy, unfortunately, is like a kamikaze. I mean, he has strapped lead weights to his body. What they're doing over there is just unprecedented monetary policy. And if you want to dig into that, I'll let you do that. I've already rambled on a little too long on this subject. Silver, the original crypto. I promise I won't say that one more time in this video. I dug into the silver retail demand side of the equation. I was curious, are people still buying silver? And I was very, very surprised what I found out. The first thing I want to mention is that just last week, we had news from Andy Schectman, I believe he's with Miles Franklin, that he'd received the single largest silver order of his career. A Texas billionaire woman apparently decided she wanted to buy $50 million worth of silver, mostly silver eagles. So to start out this conversation on demand for physical silver, we have that as a foundation right now. I believe somebody said that maybe this woman even said she's probably going to want to buy more in the future. Now, what I find interesting is when you look at the 10-ounce silver bar. To me, a 10-ounce silver bar, I have mine right here, is I look at that as that's the Ron's Basement Bellwether. That's the Ron's Basement Silver Index. And when I go online and check what the major retailers are selling those for, JM Bullion has a special right now, a big sale, I think on the Asahi bar for about $230. So that's about $23 per ounce, which is a $4 premium, as if my math is correct, over the current spot price. That's still, you're looking 20-25% premium, and that's the lowest price that they had. Most of the other bars were still selling for around $240 or $24 per ounce. Premiums on junk silver are still through the roof. Junk silver, which just a few years ago was selling for minuscule amounts over spot, is now selling for premiums that have not been seen hardly ever, okay? The final thing I want to say is I did call 5 big coin shops, 5 big coin bullion retailers throughout the country, and I basically got the same story from all of them, and that is that retail demand for silver remains very, very strong, especially in the big money purchases. So the smart money is still buying silver. There was a headline this morning, unemployment claims surged last month, 8-month highs, 251,000 people applied for first-time unemployment benefits, giving us evidence that the economy is slowing. When the economy slows, and remember, unemployment is one of the big mandates, supposedly, of our Federal Reserve. If unemployment continues to go up, the economy continues to slow, the Fed will be forced away from at least not becoming more hawkish, which feels like all they've done for over the last year. Finally, I want to touch on 2 people that have very high predictions for the price of gold as we move into the end of the year. There's a gentleman, Elaine Corbani. He works for SA Global, runs their gold and precious fund. He has a solid case for a much higher gold price, higher than $2,000 through the end of the year. And we love to remember our friends Goldman Sachs, who have a forecast of $2,500 gold by the end of the year. Thanks for joining me here in the basement. I'm glad you're here. You're always welcome. And until next time, you be well.